The luxury industry is not doing great. I'm going to share with you all the financials because these companies like LVMH, the Kering Group, Hermes, they all reported out their third quarter earnings recently, and I wanted to share with you what's happening. So it's actually worse than expected, especially when it comes to the Kering Group. The Kering Group, if you don't know, is the parent company that owns brands such as Gucci. Here's my Gucci horsebit, which I got about 2 years ago. And they also own Saint Laurent. This bag is the toy Lulu, which I got over 5 years ago. I mention this because I haven't purchased anything from these two brands since. So I'm one of those customers that is pulling away from these brands, and I think that many other customers have been pulling away as well, and partly that explains the numbers I'm going to share with you today. I have these bags out here for eye candy because we're going to be going through a lot of numbers, and I figured it's nicer to have something to look at, some eye candy, while we talk. So these are my bags from LV. Louis Vuitton, of course, is one of the star brands under the conglomerate LVMH, which we'll be talking about. LVMH is the luxury giant in the industry. And then we'll also talk about Hermes. And here's my Birkin 30, just to have it to look at. I'll spread these out. My Pochette Métis. This is the Speedy BB. But let's start with the Kering Group because they had really bad results, worse than expected. So industry experts were already expecting an 11% decline in revenue in third quarter from the Kering Group. But actually, the Kering Group reported a 16% drop in sales for Q3. So that's pretty significant, double-digit decline. And keep in mind that this comes after already a pile of losses from earlier this year. So back in June, just a few months ago, I did a video, this one, talking about Gucci's decline and whether or not they were in trouble. The same with Saint Laurent. And now they're in a worse shape than they were back then. So let's break it down. Gucci is the largest brand under the Kering Group. They reported a 25% drop in revenue just this quarter. 25%, you guys. That's massive. YSL, by the way, every time I pass by a YSL boutique, I see nobody inside. It's just the sales associates mingling with themselves. So YSL is the second largest brand under the Kering Group, and they too reported losses at 13% decline in revenue for third quarter. Now, there is a little dim light that's shining through, and that is with Bottega Veneta. I don't own anything from them. So Bottega grew their sales by 4% this quarter. But honestly, that's not much. It's low single-digit growth compared to pretty significant double-digit declines from the other brands. It's certainly not enough to offset the losses. Now, the reasons that are cited for all this poor performance are twofold. First, they're saying China. For those of you who haven't heard already, China is going through a bit of an economic meltdown, and so there are a lot of people living in China who were spending a lot of money on luxury items who have all pulled back now. Secondly, just globally on a macroeconomic level, there is a lot of instability and uncertainty at the moment, and there has been for a while, especially with inflation, the cost of daily goods going up consistently, wages not keeping up. I did a finance video on this recently. I'll link it here. So those who are more conscious about their spending and more savvy with their money, they're tightening up. Also, the Kering Group mentioned that they used to have a successful strategy that incorporated streetwear, and that appealed to many aspirational customers. But they've come out saying that streetwear is now not as popular, and there's been a significant slowdown, especially among the middle class and aspirational buyers. Now, I believe that a lot of us have a consumer mindset, but it's equally, if not more important, to have an investor mindset so you can see things from both sides of the lens. And I did look at the stock price for the Kering Group, and shares are at a 7-year low at the moment. 7-year low. So with a weak forecast, shareholders are pulling back, rightfully so. And I think, honestly, Wall Street analysts are losing a great deal of confidence. Now, the newer CEO of the Kering Group has been talking about possible store closures, as well as a new handbag revamp program. Whatever that means, no details have been disclosed yet, but that will be interesting to hear more about. So I would love to know, are you shopping Gucci? Are you shopping Saint Laurent? Are you shopping Bottega? Are you into these brands that are owned by the Kering Group? Like I said, I haven't been drawn to even enter the stores. I just pass by because nothing is drawing me in, honestly. Now let's shift gears to LVMH. LVMH is the parent company of Louis Vuitton, as well as Dior and Fendi and many, many, many other brands. They are the giant in this space. They too have seen a decline in sales. So not as bad as the Kering Group, but overall 3% drop in revenue. Sales have been slow across pretty much every category, including fashion, leather, wine, and spirits. There's no mention of jewelry, so maybe Tiffany's is doing well. Tiffany's is also owned by LVMH, and of course, these brands as well offer their own jewelry, so I haven't heard anything about jewelry. Now, if you've been following brands like Louis Vuitton, or if you've been a customer of the brand for a while, then I'm sure you've also noticed the hikes in prices. They've had really aggressive price increases over the years, as well as persistent decline in quality, unfortunately. So not a good combination. So lower quality, higher prices. And I think a lot of people are ticked off. I believe that most luxury buyers, no matter how much money they have, they know that they're buying into a degree of hype. We know that we're not paying just for the materials of somebody making this bag for us. We know that at the end of the day, when it comes to brands like Louis Vuitton, we are also paying for huge marketing budgets, celebrity endorsements, the luxury hype, the history, the name, all of that goes into it, and it's built into the price of their bags. If this was wiped clean of any branding, it would be a fraction of the cost. We know that. But at the end of the day, even though we know that, most of us do not want to compromise on quality. We may overpay for something because it's luxury and we like what they offer, but if it sucks in quality and it falls apart and there's defects and the stitching's all wonky and hardware is tarnishing and the canvas is ripping, nobody wants to deal with that, especially for the amount of money that we pay for these things. But it's really interesting because the CFO stated that becoming a more affordable brand is not the answer. Okay, and I know it's a very delicate dance that these brands play because they need to maintain this air of exclusivity, unattainability in order to be deemed luxury. But I feel that their prices have gone out of hand and their quality has not kept up. So I guess someone asked them, what about, maybe discounting or offering a more affordable line? And the CFO said, quote, "I think it would be a mistake. We still keep on the idea that we should stay faithful to what has been the recipe of our success over the years." And granted, Louis Vuitton has a very long history, and I think this quote applies to all of LVMH. But yeah, there's a lot of history there, and clearly some of their strategies have worked because they are a billion-dollar, multi-billion-dollar behemoth. But at the same time, something is clearly not working anymore. And when they started pushing people to buy more leather instead of the classic tried and true monogram or canvas pieces that were bestsellers, I think that also ticked off people. And I have a leather bag from LV, the Speedy BB in the lambskin, which I enjoy carrying. But when I think of LV, I don't think of leather. I think of canvas because their heritage is centered on travel pieces, their trunks, durability. The canvas was endorsed as being scratch resistant, weather resistant, fire resistant. So when they shift to more higher end leather pieces and jack up the prices even more, and then they start introducing really expensive exotic leather pieces, not a lot of people are very interested in that. This is classic LV, right? The Speedy. And nobody's really talking about buying these little guys anymore, these little workhorses, the mini pochette. The prices on these have gone up so much, you could probably buy a couple of different handbags from a different brand rather than buy this tiny little pochette from LV for the same price now. And then keep in mind what they did with some of these items that everybody really enjoyed and started putting chains and accessorizing them. They pulled this from production because I guess they didn't like that customers were taking creative liberties with their own items. And so they started messing around with the classic piece. They raise the price, they bring it back out and introduce it as if it's something new and fresh. I don't think they're fooling many people. So again, I looked at the stock price for LVMH. Shares fell by 7% right after earnings were reported. That means the wolf in cashmere, Bernard Arnault, who's the head of LVMH, is taking a multi-billion-dollar hit to his net worth. Not that I feel bad for the guy, but because most of his wealth is in shares within LVMH, when the stock price swings, his net worth goes up and down like crazy. By the way, if you enjoy this type of content and you want to encourage me to keep doing research and keep sharing out finance videos, please give this video a like. All right, interestingly, one analyst from Bernstein said, we see LVMH as the weakest among the quality names. That's a very damning statement, isn't it? The results from the Kering Group were worse. But this analyst is saying, actually, LVMH is one of the weakest players. And then a Citigroup analyst added that he anticipates a 3 to 5% downgrade to expectations for LVMH's full year revenue. Boy, am I glad I sold off all of my shares of LVMH. If you watched my videos from a couple of years ago, you may know that I was invested in LVMH and I held on to those shares and kept buying more for a few years. And then I decided one day to sell them all at a nice profit because I started to see the writing on the wall. And I also realized that I myself was pulling away from shopping from a lot of the brands owned by LVMH. And for me, if I can't support a brand or a company, I'm certainly not going to invest in it. So I pulled out and I'm good and clean. But I'm curious if you own any shares of LVMH and if this impacts your decisions in any way. LVMH also announced that they're selling off the brand Off-White to Blue Star Alliance. Now, Off-White, if you don't know, was a very trendy luxury streetwear brand that was owned by LVMH, but will now be part of Blue Star Alliance. Blue Star Alliance is a group that is known for buying distressed brands, and so they'll take the labels and then start licensing out those names. So for example, in the Blue Star portfolio, they have brands like Tahari and Scotch and Soda. So you kind of get a sense of what level, what segment they're playing in. All right, shifting now to Hermes. While this is all happening, the hot mess is happening over here, Hermes is like the shining star once again. They reported an 11.3% increase in their revenues for Q3. And apparently all of their divisions, except for watches, posted higher growth than expected. I have to say, if I was living in an imaginary world and somebody held me captive and said that I have to choose one luxury house to shop with from here on out, I mean, this is all make-believe, but if I had to choose one, it probably would be Hermes because there's more of a range that I enjoy, not necessarily handbags, but when it comes to like their jewelry, their accessories, their ready-to-wear, their scarves, fragrances, beauty, the tableware, the homeware is quite nice. I don't feel as inundated by them. I don't feel as exhausted by them. I also don't think they have the same quality issues and they're more conservative with their price increases. Anyway, that's my 2 cents. I would love to know what your thoughts are down in the comment section. And once again, if you like this video, please give it a thumbs up and consider subscribing to be a part of this community. I'll see you all next time. Bye-bye.